Thank you. The next question is from the line of Ashlesh Sonje from Kotak Securities. Please go ahead.
Hi team, good evening. A few questions from my side. Firstly, can you talk qualitatively about how is the current bucket collection efficiency in the month of October, whether it has deteriorated versus September, improved or remained flat? Just the current bucket part.
So thanks, Ashlesh. I think it has not improved, I'll say, and maybe it has slightly gone down only, and that's why I mentioned that this October and till now it is either in the same range or it is lower than that, and so that's why I mentioned that the improvement should start from next quarter only. We don't expect much improvement in this quarter, so it's almost in the same range what it was in the month of September.
Perfect. Sir, and on a state-wise basis, can you comment, give us a bit more details on what are the challenges that your loan officers are facing on the ground? You highlighted a few things around over-indebtedness and Karza Mukti, but because if I look at the slippage numbers, they seem to be a bit on the higher side. So if you can just comment around it, why the slippage numbers seem to be higher than others, and also if you can give out the breakup of slippages across segments.
No, across segments or we are talking across states?
Yeah. So slippages I can give you, Ashlesh. So total slippages is about 356 crore, of which about 300 crore is micro banking, and balance 55 crore is a non-micro banking.
And just commentary on the collections across states. What are the challenges that you are facing?
No, actually the challenge remains the same, that because of the recent guardrails by MFIN, I think there are a lot of customers who become ineligible for any fresh loans. So that is causing stress, and we are seeing some of the pockets, especially in some of the pockets in Bihar, Uttar Pradesh, some pockets in Odisha and Jharkhand, where we are having, you can say, little bigger challenges than other pockets. So we are finding for example, the Maharashtra is better than all these places. Though we have a small portfolio in Vidarbha and Maharashtra, but there it is a little better than the other places what we have seen so far. And largely because one is that 4+ lenders are there, and everyone in the industry, the banks, the small finance bank, NBFC, all have stopped lending to these people. So there is a stress built up right now, and that is causing challenge. Typically what happens, because normally we all go for collection through center meetings. Now if there are some, around 10-12% customers who are in various buckets who have not paid, then sometimes you have to go for door-to-door collections, which is really time consuming. That is causing more stress, I'll put it this way. So gradually we are seeing that those customers are getting weeded out, and that's why I'm confident that next 1 to 2 months time we'll see that the situation will improve from here in terms of the customer who are eligible, they will come forward and they will there will not new slippages because of this reason. So that is what we are facing or what we are seeing. In some pockets we have seen things like Karza Mukti Andolan, like Gorakhpur and that area, a few pockets in Jharkhand also. And incidentally this time we have got a good support from the administration and even police authorities also. And they are not able to take this forward, but sometimes temporarily for a week or for 10 days this certainly impacts, but it has not a impact beyond that.
Thank you, sir. And just lastly, any update on equity capital raising plans?
So right now we are not in the process of raising any equity. I mean, we are in terms of capital adequacy, we are quite comfortable, and certainly, I mean, we at least for this year we may not require any Tier 1 equity.
Perfect, sir. Those are all the questions I had. Thanks a lot and good luck.
Thanks, Ajay. Thank you.
Thank you. The next question is from the line of Sonal Minhas from Prescient Capital. Please go ahead.
Hi, sir. Am I audible?
Yes. Yeah, you're audible. Please go ahead.
So I wanted to understand the vintage of your MFI customers, basically the GLG customers. So you have 100 customers. What would be the vintage of customers who've been with you for more than 2 years or more than 5 years? Any slicing on that sort that you've done? If you could share some data.
So we can give you a cycle-wise data, loan cycle-wise. So about 26% of customers are in first cycle. Second cycle and third cycle are again close to 20% each, and balance is 4 and 4 plus.
So you said 23% are in the first cycle.
26% is first cycle. Second and third cycle each is close to 20%, and balance is 4 and 4 plus.
Got it. Okay. And sir, I just wanted to understand your recognition bucket. If you could explain that vis-a-vis the industry, at what levels of DPD you provide for what, that will just help understand how conservative you are in terms of your bookkeeping. If you could help that. Hello? Hello?
Yeah, can you come again, please?
Sir, I wanted to understand your recognition buckets for the basis on DPD, like at 0 to 30 DPD, what do you provide for? At 30 to 60 DPD, what do you provide for? When do you write off a loan? What are these vis-a-vis the peer set in the industry? If you could explain that, that will help.
Yeah. So for provisioning, we are following for all unsecured loans. So we start with 40% provisioning on the 91st day itself. And then every quarter...
Could you be a bit louder? Sorry, your voice is echoing here.
So for all unsecured loans, we start with 40% provisioning the moment it is crossing 90 days. So it starts from 40%, and then every quarter it will get added 15% each. So within 12 months, we provide 100%.
Okay, so 100% is provided at 360 days, basically.
Correct. So it starts with 40% on 91st day when it becomes NPA.
Got it. And between 30 and 90 days, are you seeing collection improve significantly based on customer behavior, or that's something which also is pretty close to what the bucket post 90 days is?
So typically for JLG, the normal course, it used to be quick turnarounds. We used to get a higher collections. But because of last 2-3 months when we had post this guardrail had been put by, because we are the stressed customer around 12-13% of for the industry level also. There I think we are finding the slippage is more and recovery from slippage is less in fact. And that is why, we just mentioned that.
My question is generic here, like do customers pay after 60 days to you? Behaviorally I'm trying to understand, or typically it is easier to assume that after 90 days most of these loans slip up to be kind of write-offs.
So if you see historical data, we have seen even a collection from a written off account. So as Alok sir was saying, let's say even if we have provided 100%, post account has become NPA, after a year we have provided 100%, and after that point we have written off as well. But historically we have seen even more than 10% collection from a written off pool. And NPAs also we have seen reasonably good collection, but typically, it also depends on time to time and stress to stress point. So typically when there is a very high stress time, the entire focus will go on collections from softer buckets and from regular clients. The moment stress alleviates, actually your focus moves on collecting from a harder bucket clients as well. So in normal time, we see good collections from NPAs as well.
Okay, so my question is that let's say if 10 accounts slip after 60 DPD, and out of those, you are saying that so 10 accounts slip after 60 DPD. How many of those accounts actually reach, let's say, 360-degree DPD cycle? All of them, or very few of them?
No, alternatively, what I can tell you is roughly, let's say, whatever accounts slip to NPA, typically in past we have seen recovery of about 25-30% from that pool as well. And as I said, maybe more than 10% from a write-off pool.
Got it. Okay. Understand that. I'll just fall back in the queue. I have more questions.
No problem.
Sure.